Hello and welcome to our YouTube channel. Today, we will be discussing long and short strategies in stock markets. These are two fundamental approaches to trading in the stock market, and understanding them is crucial to successful investing. Before we begin, let's define what we mean by long and short in the context of the stock market. Long. A long position is when an investor buys a stock with the expectation that it will increase in value over time. This is also referred to as going long or buying long. Short. A short position is when an investor sells a stock with the expectation that it will decrease in value over time. This is also referred to as going short or selling short. Now that we've defined the terms, let's dive deeper into each strategy. Long strategy. A long strategy involves buying stocks with the expectation of holding them for an extended period. This strategy is commonly used by investors who believe that the stock's price will increase in the future. The goal of a long strategy is to profit from the stock's price appreciation. Short strategy. A short strategy involves selling stocks that the investor doesn't own in the hopes of buying them back at a lower price. This strategy is used by investors who believe that the stock's price will decline in the future. The goal of a short strategy is to profit from the stock's price depreciation. Both long and short strategies have their advantages and disadvantages. Let's take a closer look at each. Advantages of a long strategy. 1. Potential for significant gains over time. 2. Generally less risky than short strategies. 3. Suitable for investors who believe in the long-term potential of a company. Disadvantages of a long strategy. 1. Can experience significant losses if the stock's price declines. 2. Requires patience and a long-term perspective. 3. Returns are not guaranteed. Advantages of a short strategy. 1. Can profit from a decline in the stock's price. 2. Can be used to hedge against other long positions in a portfolio. 3. Returns are not dependent on the overall direction of the market. Disadvantages of a short strategy. 1. Potentially significant losses if the stock's price increases. 2. Can be risky and requires careful monitoring of market trends. 3. Not suitable for all investors. As you can see, both long and short strategies have their pros and cons. The key is to determine which strategy is best for your investment goals and risk tolerance. Thank you for watching our video on long and short strategies in the stock market. We hope you found this information helpful in making informed investment decisions. Remember, investing in the financial markets involves risks, so it is important to conduct thorough research before making any investment decision. Don't forget to like and subscribe to our channel for more informative content.